Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you. Good morning, everybody. Welcome back to another live stream. Hope you're all doing well, and I hope you're ready for what could be one of the more market-moving events of this week. You know, I saw something this morning that was an attempt to kind of sandbag the jobs number this morning from the White House. I thought it was interesting. Basically, them putting out a memo that essentially we shouldn't be shocked or surprised or terrified if we do see some weak jobs numbers today, which I thought was an interesting thing to hear from the White House. Regardless, we'll see what we get. You know, if we get either scenario or all three of these possible scenarios, I figured in yesterday's video, I did a little bit of a breakdown on all of these things, but maybe we could do a quick refresher here to prepare for this NFP event and what each type of data release could produce for the markets here today. So let's do it. We'll do a little quick refresher how this data point today could impact stocks, gold, and the US dollar. So as we get started, if you could do me a really quick favor, we're here every day, Monday through Friday. Live streams are completely free, trying to keep people educated on what's going on in markets for a love of the game. If you enjoy these shows, if they are helpful to you, and if you want the algorithm to show them to you more in the future to help you improve your trading, subscribe, hit the notification bell, and give us a thumbs up on the show for the wonderful team of people behind the scenes making all this possible. Let's get into it. Okay, so today, let's define what we mean by a strong, neutral, or weak NFP data point. So today we are expecting, let's give our expected in E here. We're expecting, let's call it 65,000 jobs. So we're going to omit for a second unemployment rate, which adds another layer to this. But we're just going to look at the monthly jobs added to the NFP report. Okay. Let's say that we're going to define strong NFP as 75K or greater. Okay. So 75K is the threshold here. Neutral, let's call it 65, right? Let's say as expected. And then a weak NFP, let's call it 40 or less. These are sort of just nick numbers. I'm just making these up, right? So if the number is less than 40K, if the number is greater than 75K, these are going to be our thresholds, okay? And I guess I could, no, we're just going to keep it here. We'll move it over just a little bit. There we go. Okay, so now that we have this breakdown, let's talk about how all of these things impact stocks, gold, and US dollar. And someone asked about oil in the chat. So just for you, thank you for being here. We'll add oil to the mix. Okay, so let's talk about it. NFP being strong. Let's say today we have an upbeat jobs number and we beat expectations of about 75,000, right? We're going to add oil. I know I got a couple people. You guys love oil here in the chat. We'll take a look at oil. Okay, so NFP comes in strong. Let's say we have an 80,000 jobs added to the US economy and it's an upbeat number. People say, "Hey, we got strong jobs numbers coming in." What does that do to the market? Well, I'm going to go ahead and say that I personally think right now that leans stock bullish. This is actually kind of easier said than done. Too strong of jobs number. Let's say if it's like very strong, like 120K jobs, like if it was something crazy, that would not necessarily be super bullish for stocks. It would be good for the US economy, but not necessarily for stocks. Stocks in the economy are not always one-to-one. If you have stocks seeing too strong of jobs data, what could it do? Well, it could stop the Fed from wanting to cut rates, which the stock market would not like. If NFP comes in strong, what does that do to gold? Not so good, right? Gold thrives in a chaotic, weak jobs market. So for those of you who are here to pay attention to the US dollar, to gold, etc., pay attention. We're doing it right now. I got people asking me to look at gold. We're doing it, right? We're doing the stuff that matters. We're talking about the actual data point that you're about to see rather than staring at candlesticks like a monkey junkie on the charts. Let's just hold off. NFP comes in strong. What does that do to the dollar? This is pretty obvious, right? Strong jobs, strong dollar. What about oil? Okay. Well, oil, similar to the US dollar. In a lot of ways, they actually can move together because if you have strong jobs, that's a strong demand for oil, right? What about NFP neutral? Well, for this one, we can kind of just be boring and let's just say, actually, take that back. Stocks like this. If NFP is not too bad, not too good, stocks like it. In fact, this might actually be the best case scenario for stocks specifically. And then finally, what about NFP comes in weak? Well, if it comes in really weak, the stock market might have a little bit of a growth concern. They'll say, ooh, too weak of jobs is not good for the potential earnings of future company or of companies, right? We don't want to see earnings get hit because if people are losing jobs, if there's not a lot of jobs going on, that could be a sign of slow hiring, a slow spending from businesses. That's not super great. Gold, what about gold? Loves it, right? What about dollar? Weak. Oil, weak. Was this helpful? Give me a 1 in the chat if this was helpful, a 2 in the chat if you're like, Nick, this is not helpful. I don't care. I think building these charts are a remarkably useful tool. And I'm going to go ahead and say it. Top secret, something like this might be coming to an edge finder near you. How convenient, how cool would it be if you could open up the best macro fundamental screening software for retail traders in the game, and it could give you a play-by-play prep for NFP events, for CPI events? Would that not just secure Edgefinder as the GOAT of fundamental analysis software? If you don't know what the Edgefinder is, if you're new here, I'm talking about our software that screens a bunch of macro data and helps us build logical trade plans around macro fundamentals. It's the stuff that moves markets. It's also the stuff that confuses the heck out of people. What if you had a business that's sole purpose was to take this powerful data and make it accessible to traders? Well, you're in luck. Right now, the Edgefinder is free to use. Like, it's public access. We dropped a link here yesterday and the day before. This is free to use this week. If you aren't using it, what are you doing? It's free for a limited time. We are a business, we have expenses, and we do have expenses. So, it's not always free, but today it's free. You can access the Edgefinder completely free. Scan the QR code that is below my camera. If you want to try out the Edgefinder, please do it. Give us some feedback. How can we improve? We want to earn your business. We want to be the best fundamental macro software that you've ever seen. We want to make our software so dang good that you can't live without it. In fact, fair warning. I mean, I got to stamp a warning on this. If you try this thing out, you're not going to want to trade without it. So be careful. Trade at use the edge finder at your own risk. The second you start using this thing, if you are a macro trader, you will be caught by the bug, the edge finder bug. Okay? So get yourself a copy. It's free to use. Why aren't you doing it? I've literally got people saying, I did last time around, we had a free week. We did this, months ago. We had a free week, and I had some people said, drop comments on the videos and stuff. And they're like, oh, I just didn't get around to it. What are you doing? It's free. It's free to use. Anyways, NFP event comes out here in a few minutes. We've got about 3 minutes to go. Stick around because we're going to actually talk about how this data impacts markets. Obviously, we just did that together, but let's talk about it in terms of when it actually drops, how this impacts. Now, I have to add another layer to this because when we just did that table, we talked about these specifically the employment change numbers, right? The non-farm payroll numbers, number of jobs added or lost. But there's a second component to this that we do need to acknowledge, and that's the unemployment rate. This is also very important. So for example, right, you can see there's 3 red folders here. All 3 of these mean something, okay? It drives us macro know-it-all traders like myself, right? Us macro guys, it drives us crazy when people just call these things red folder news. No, this is driving data points. This is the stuff that moves markets. It's the economy. It's the real world. So when people chop it up as, oh, I like to trade red folder news, or, oh, I avoid red folder news, without the respect of what these data points actually tell us, because it's monumental, drives us crazy. But yes, they are red folder events, but what are the actual events? Well, we have our average hourly earnings. That'll give us an insight into what employers are paying. If wages are rising, that is typically a strong sign for the dollar. It's a strong sign for hiring, right? And if businesses are hurting, they may not be able to give wage increases as aggressively. It depends what the labor market is looking like. If the labor market is more competitive, wages go up, right? Then we just did the NFP, right? The employment change, then unemployment rate, right? Unemployment rate also matters. It's a statistic that gives us a percentage of people unemployed looking for work. And so if we have 4.4%, that's really not bad. That's pretty low, actually very low. But if that starts to rise, we're expecting today to see 4.4%. We got 1 minute to go. If that number comes in at 4.6, right? That's weak. That's showing a rise in unemployment. That annoys the heck out of me. Yes, man. I'm telling you what, when I see people just say, oh, the worst thing is a lot of people will be like, oh, I can't wait to trade CPI. And they don't even know what CPI stands for. Or I love NFP day. And they don't know what NFP is. They just know it's a big, what are we, in a casino? That's straight up, I just like to pull the slot machine because it just flashes lights in my face, right? We got to understand this stuff. This is the stuff that moves markets. It's the reason. Why are these charts moving so much on these events? Because they matter, because they impact the actual underlying what this is. It's a marketplace. Anyways, I could rant on that for 6 years. In fact, I have. Let's talk a little bit about what we've got here. We got about 20 seconds to go. I have pulled up a screen here for you guys that shows a 1 hour view of big 4, right? We've got the dollar, oil, silver, gold, NAS, Bitcoin, Dow, and S&P 500 all on the screen. The big 8, I should say. We'll see how this number comes in. Data should drop any second now. Let's see what we get for NFP event. Okay, initial response is a strong move on the dollar. S&P 500 slightly higher as well. Gold is dropping. Dollar is moving here. We do actually have a pretty solid move to the upside on USD. That is going to tell us we may have seen some strong jobs data points. Let's see what we got. Drop the number if you have it in the chat. There it is. Oh my goodness, look at that. Ooh, baby, 130K added jobs compared to a forecasted 66,000 jobs. Average hourly earnings went to 0.4% month over month. That was stronger than expected. And unemployment went lower. That, my friends, is an A+ report. Boom. Perfect. Perfect score. 10 out of 10. Average hourly earnings, strong. Non-farm payroll, strong. Unemployment rate, strong. Boom. That is USD bullish right there. Look at that move here. We are seeing gold come down. We're seeing silver move down a little bit as well. Oil is up, as we discussed. Dollar, though, probably taking center stage. Let's take a look at that. That is the sweet spot for what we talked about on USD, right? You take a look at the 15-minute time frame. Boom. Look at that initial move here to the upside. Now, NFP days are very volatile. You could have this thing whip all the way back down and then come back all the way up. So I always kind of look at this stuff a little skeptically on the lower time frames when it comes to these events. But from a general macro perspective, that's very strong for US dollar. I would not be surprised if that does round out and continue to move higher. Now, we do have CPI on Friday, which could shake things up. But for the here and now, that's a strong report for the dollar and definitely a win for USD bulls in terms of a macro layout. Now, price action in the short term could do all sorts of stuff, but that's a very bullish report for the jobs report here this morning. Again, NFP came in much stronger than expected. We talked about earlier, talking about an expectation of around 66,000 jobs. Did they revise numbers lower? The stock standard? Barely. They barely moved the revised numbers from the previous report. That's about an A+. That's an A+ right there. Wow. It's been a minute since you've had an actual good jobs report. So that is quite interesting. What does this mean for US stocks? Well, so let's talk about that. It's always a challenge, right? Because if you remember when we discussed this in my video yesterday and today, we talked about you don't want too hot jobs data. You don't want too weak jobs data if you are a stock market bull. Today, we had a very strong jobs report, and that is why I would argue you aren't seeing massive move higher, but you're also not seeing massive move lower. Look, it's good jobs data. The strong hiring and unemployment rate staying low is a positive thing for the economy, and hence that's good for stock earnings. However, why is it not causing the stock market to fly through the highs? Well, strong jobs also probably give us a little bit of a backlash on interest rates. Take a look. It's all moving together. This is why we always say fundamentals are king. It's because it's all in there. It's the story of the markets. This strength is going to wipe away probabilities for interest rate cuts, or at least diminish the probabilities of rate cuts in the United States due to, hey, the labor market's doing fine. We don't need to rate cut. What does that do to stocks? Stocks don't love that. But stocks do love a strong labor market, right? Strong labor market, people getting hired, people getting wage increases. They're going to go out and spend money. That's good for earnings growth for companies. So there's a good here and there's a not so good here. But on a net basis, it's hard for me. My personal philosophy, I am in the camp of thinking strong jobs data and less rate cuts. That's good with me. I'm perfectly fine with it. I think that's really good because you can still have the stock market go higher on an overall basis if we keep interest rates around where they currently are, as long as corporate earnings, hiring, etc., really starts to continue to pick up. That's a good story. That's a cake I'd take a slice out of. So when it comes to the S&P 500, when it comes to the NASDAQ, I view this personally as positive news, not something that's going to, fly high in terms of what usually gets the stock market to just go ripping through the highs is oftentimes basically the willingness for investors to take risk, a risk on type of move. What can incite that? Well, lower interest rates can incite that in the short term. So had we seen jobs data come in at 70,000 or 55,000, jobs market not too weak, not too solid, stock market might have actually popped harder than this. So anyways, that's my thought process on it. Again, that is a really strong report for the US dollar here. Let's take a look at some currencies in response to this. I know I have a lot of people asking me questions and dropping comments. I'm not ignoring you. It's just I've got a lot of stuff here to report on in the moment. It's hard for me to read the chat at the same time. Euro dollar is moving lower here, down 0.5% against the US dollar. Pound dollar down 0.22%. Dollar yen up here in response to this. Dollar Swiss franc rebounding sharply. Dollar CAD up here. Aussie dollar timidly lower here. Kiwi dollar also a little bit lower. And in response to this, seeing a little bit of yen weakness, does it seem? Yes, it does. So we have a little bit of yen weakness as well. Silver was up at one point, I think 7% this morning. So giving back some gains. Same with gold. Gold, we talked about this level in yesterday's video. This to me, I'm pretty in the mix or in neutral camp now with gold. Now, prior to this report, Edgefinder was starting to get a little bit of a stronger read. However, my concern here is that now that the jobs report is going to factor in, this could very well cause gold to roll over here in the short run. Depends what happens with CPI, but I would say that this move lower in gold is justified and potentially has room to continue to pull back. We'll see. S&P 500, again, here's the 5-minute time frame. You can see nice strong candle on the NFP print. And yeah, not too bad. Not too bad. Very surprising. I mean, like I said, you get used to seeing not great jobs data, right? If we take a look at our economic data here for just a second, I mean, we have seen for a consistent amount of time, the trend has been, hey, US jobs have just been lackluster. We had 50K, we've been trending to the downside. This is just one data point. So it's not, I wouldn't say it's, it's all over for dollar bears forever because it's just one data point. However, it's a good one. 130,000 jobs added. When this populates in Edgefinder, it'll update within the next 30 minutes or so. When everything in the Edgefinder updates, what you'll see here is, a red dot here and a big shoot to the upside in terms of surprise on today's report. Unemployment rate also will come down. This is nice, right? We're seeing 4.3%. This is, again, labor data looks good. What's so fascinating to me, I don't know if you guys saw this. Look at this, right? Before this, we have to revise our expectations. White House downplays the coming report. This is just confusing to me because maybe they didn't, obviously maybe they didn't see the actual data points, but they downplayed a report that came smash hit to the upside. What a fake out there, right? Not necessarily by the White House. I'm just saying, they were kind of sandbagging like, oh, hey, might not be the best jobs number. And then boom, it was a strong jobs number. Again, 130,000 jobs. Is that gangbuster best jobs report we've ever had? No, but it's certainly better than what we've been having, right? We've been having for the last few years. And this is not a commentary on, pro-Trump per se. I'm just saying that we've had for quite some time, both under Trump and under Biden before him, the jobs market's been in a funk, right? We've seen this, slowing. So to have an upbeat number is strong. It's a good sign. It's posted 8 hours ago. Ivan, are you talking about this report here? The White House commentary? I think that's what you mean. How does the data affect Bitcoin? Just mirror the stock market for the most part, right? I always say this, not to downplay my crypto friends, but it might as well be a leveraged tech stock in my eyes until proven otherwise, right? Maybe someday you will have something different for Bitcoin where it breaks the correlation. But to me, correlation to high leveraged, tech stocks is pretty frustrating. If I was a crypto Marxist or whatever, like if you thought this was going to be the future of currency, what would be really frustrating to me is how correlated it is to high risk leveraged tech stocks, right? Why is that frustrating? Because again, the investment community, the trading community, the world, which has now overtaken Bitcoin, Wall Street, pretty much treats it like it is another Spotify or not quite an Nvidia, but like a small cap leveraged tech stock. And again, that's kind of how I trade it too, You know, if I want added leverage without paying for it, I like to trade Bitcoin. But I'm not a hodler personally. Anyways, we'll keep moving along. This is positive for Bitcoin, I would argue, but there's so many challenges to Bitcoin right now in terms of technicals. This thing is just in a free fall here. I think you really, if you're a Bitcoin bull, you need to start seeing higher lows, higher highs. We need to see this thing break that downward structure. And this is why I say I'm a trader of Bitcoin. I'm not a, passive hodler investor type person, because again, maybe this is great long-term value that you're getting here. I just don't have a really solid way of doing that, because again, I like buying stocks because I can understand cash flows and I can understand price relative to their earnings, and I can do that stuff and I can make sense of that. I can't do that with Bitcoin. It's just hard for me to do that. Now, from a sentiment, from a momentum, from a trading perspective, I love trading Bitcoin up and down, right? But just hard for me to be a passive investor in it. No shade to my crypto friends. Maybe you see something and you like something there better than I do. Maybe you don't like stocks, but I love, stocks, companies, because it's something I can understand and I can try and assign some kind of value. Nick, yen is not making sense at the moment. Let's take a look. Yen is on a 15-minute time frame. Look at this. JXY shot lower on the report, sharply moved back. Did the dollar index come down here? Interesting. You do have dollar index pulling back on an intraday chart. JPY intervention, very possible, Othmane. You say that, you may be very much on the right track with that. It's actually not out of the question. This is going to sound like I'm making up some kind of an excuse, but genuinely, this has been reported several times in the past that after a major U.S. economic event, if it gives a favorable exchange, the Bank of Japan has in the past taken those moments and that added liquidity in the system to offload US dollars to buy Japanese yen. Not financial advice, but I'll give you just my 2 cents on this really quickly. If that is taking place, if the US dollar is getting suppressed due to that currently, I know this sounds like conspiracy tinfoil hat stuff. I promise it's not. You can look it up. The Bank of Japan has in the past, when they are interested in strengthening their own currency, has taken jobs reports, CPI reports, et cetera, as opportunities to, move in on that exchange rate. Because again, they have been in favor. They've been very outspoken about exchange rates not being favorable right now. They do not want the yen to get too weak against the dollar. And so there is that possibility they want this thing to continue to roll over. But just because they want it doesn't mean the market will let it happen. My personal thought, not financial advice, there still is some short-term dollar strength here that could be coming into the picture. And if you do get some short-term profit taking, some short-term selling of dollars, I would not be surprised to see the market step in and buy the dollar. That is my thought. Dollar yen has a 117 pip candle. No, it doesn't, Ivan. You're lying. You're lying. Look at that. Wow, you're right. 180 pips or so. Ginormous move there. So you can see if we go down to a 1-minute time frame, big move higher. And look at this, right? That is almost certainly what happened. Ivan is calling this out in real time for us. 8:30, the jobs number comes out, shoots higher, and no other candle looks as violent, right? Here's euro dollar, here's dollar Swiss, but look at dollar yen. Violent reversal. I think we have some potential BOJ stuff going on. Very interesting. It's a bank holiday in Japan. Not sure if it changes anything. I don't really know either. I don't know. But yeah, look at that reversal, right? So dollar strength met with, I'm going to, this is just speculation on my part. Bank of Japan might have said, ooh, take that, sell some dollars. Boom. Very interesting. Again, I know this sounds like I'm talking some kind of like tinfoil hat type of scenario, but that's real stuff. The Bank of Japan wanting to keep the exchange rate suppressed is not speculation. It's not conspiracy. It is by their own admission. They do not want the exchange rate against the dollar to make the yen too weak. Very interesting. Very interesting. But it is a very well-known, report, obviously, the jobs number out of the United States. If that causes a huge swing in favor of the dollar over the yen, and the Bank of Japan says we don't like that, they can step in and take that as an opportunity to sell dollars. So, and man, I know that I have mentioned this a couple times. You've been watching my channel. I continue to think that that is going on behind the scenes. I still think that there is unwind from Bank of Japan. Can we see that in... Now, obviously, this is not central bank tracking stuff, which would be cool to add to Edgefinder, but we do still see institutional activity through the Commitment of Traders report. And it does seem that we continue to see Japanese yen buying on the institutional front, perhaps sniffing out what's going on with the Bank of Japan, as we're discussing here. We can see long contracts on the JPY, the futures market here for the yen, showing strength. Institutions buying the yen, closing short contracts, significant upswing in net percentage change. I still think there's some of this going on behind the scenes. I think that part of the reason you see crypto so suppressed is tightening of monetary conditions in Japan going on through the long end of their bond market curve. Now, I know that sounded like jargon to somebody who's like new to this stuff. They're like, what the heck are you saying, dude? I'm not trying to sound confusing. I'm trying to get at the root cause of what the finance bros, the finance bros of YouTube are all over, which is this whole Japan stuff, right? Look, Japanese 10-year yields continue to move higher. Here's the 30-year yield in Japan. This is monetary policy. I've said this 100 times on my channel. This is effectively a global rate hike that is going on through Japan. With higher interest rates, liquidity, borrowing costs globally on the global stage are going up. And so borrowing costs going up on a global stage oftentimes comes at the cost of high-risk assets like cryptos. I do not think it is coincidence that Bitcoin is having a terrible, terrible couple months at the same time that the Japanese bond market is skyrocketing in yields. I don't think that's coincidence at all. I think that is a steady, persistent force in this market that is going to continue, or at least has for a while. We've been talking about this for a while. Has, and likely, in my opinion, will continue to be a burden on high-risk assets like crypto. Stocks too, but I think Bitcoin is the easier one to pick on. If you're a leveraged fund, a hedge fund globally, and you have some exposure to all sorts of different stock markets, European stocks, US stocks, and then you also have like a chunk of it in Bitcoin, what's the easiest thing to get rid of if you have margin concerns? Well, how about the high margin stuff? How about the highly, volatile stuff? That's the easiest thing to sell in your portfolio if you are trying to de-risk, deleverage, and unwind a little bit of that potential borrowed money from the Bank of Japan. So that's where I think persistently this Bitcoin move and the Japanese yields are connected. Japanese stocks continue to skyrocket higher. This is really strong. Off the idea that, again, Bank of Japan, the yen's going to remain weak. They have fiscal stimulus going like crazy with the new prime minister and her blowout victory. It is expected that there will be substantial printing of money. And so that is where you may be seeing a little bit of a step in from the Bank of Japan today in this jobs report to actually sell dollars and to buy yen. That's my thought. But I will say that was a strong jobs report out of the US, and I think that the short-term price action here could still resolve to the upside. That would be my educated guess. And as always with trading, we never know with certainty what's going to happen. But my educated guess is that this will remain strong. And you might come back to this. You might hear me say that. And then tomorrow the dollar's like down here. And you're like, that Nick dude is an idiot. But if you think that, just remember that nobody knows with certainty what markets are going to do. It is always about making an educated guess, risking appropriately, setting up your scenarios for if you're right, if you're wrong, what are you going to do, and maximizing when your winners run and cutting losers quickly. Everyone who you ever listen to, everyone who you've ever heard, every single person on YouTube is wrong pretty often. It just depends how much they show it to you on their screen, right? No one's right all the time in markets. The question is, what do you do when you are right, and how do you handle when you're wrong? My thought, though, best educated guess, this is supportive of a strong dollar here today, and I would not be surprised. I probably would stay away from dollar yen, just because I think that there's clear appetite from BOJ to step in and try and sell dollars, buy yen. But something else like euro dollar, if you come back up into these areas from a short-term technical perspective, does that get met with sell pressure? Do we continue to roll back over down to these lows? I'd say it's possible. Again, yields remain pretty strong. Pretty strong overall, so we'll continue to monitor that. This jobs report probably puts in a decreased probability of interest rate cuts. I think that's very fair to say, because that's the type of jobs report that you don't get all the time. You do not usually get a blowout report. NFP rose by 130,000 in January, and unemployment rate changed little. I mean, that's the type of jobs report. I said it right as it came out, and I'll stay with it. I think that's an A+ jobs report. Strong jobs added, unemployment rate came down, wage growth went up. Very strong. Let's see. Somebody said they're confused about gold. Gold's pretty mixed. I would say this was a net negative report for gold, right? Here's the 830 report. Shot lower initially, came back up a little bit. But mostly on a net basis, I would say this was a negative report for gold. And the bias should be slightly more bearish overall on this, at least in the here and now, based on today's data only, right? Just from an individual, what happened today, I would say that this is more bearish for gold than not. But gold was up a lot this morning, right? So it's giving back some of its gains. At one point, we were up to 51.19. We're down to 5,060 on gold. Silver also was at one point up to 86 today, went down as far as 83.4. So you did have a push lower. Oil, pretty supported by this. This makes good sense to me. Oil looks really clean, by the way. It's probably one of my more favorite setups right now. If you get the breakout through these highs, I'm very curious to look for a continued push in oil. I think oil can continue higher. So we'll keep an eye on it. Bitcoin. Bitcoin is the most frustrating. I don't have any trades on or investments in it, but it is a very frustrating one for a lot of the crypto crowd, because even a good jobs print, even it's like nothing can save Bitcoin right now. Something will change, at some point, maybe the appetite for risk shifts once more, but my goodness, man, it's like nothing can get Bitcoin to move higher. And I'll tell you why. If you scroll back 10 minutes ago when I started talking about the Japanese stuff, I still think that is a lead reason. I think that the interest rates rising in Japan are putting downward pressure persistently, consistently, and powerfully on Bitcoin. I've said that so many times in my videos. I know there's all these sorts of things, drama day to day on crypto this and, but at the end of the day, if borrowing rates globally remain elevated, it is a pressure on high risk, speculative type investment classes. And so crypto is hurting. And we can see this, guys, that the market is smart. So there's also stuff like, how do I express? I'm trying to think of an ETF that would give me what I'm wanting here. Like really growthy stuff. IWG, would that work? No, IWF, is that it? Let's like look at this. Like here's maybe a somewhat evident chart, right? So if we take a look at like October until now, the Russell Growth ETF is down like 7%. This is not my best example I could have come up with, but it kind of serves the purpose. What I'm saying is that the whole, rising rates in Japan might as well be rising rates everywhere. Okay? So if rising rates are taking place, what's the thing that gets hit the easiest and the hardest? High risk stuff that requires leverage, borrowing costs, etc. Crypto falls in that same category, right? You can take a look at a lot of names that are sort of your higher risk stuff. Like, let's just list a couple stocks, like Spotify, right? Spotify getting nailed. Duolingo, just another one that's getting nailed. I'm going to try and think of some that are not all tech, but mostly it's going to be tech stuff. Like IGV getting hit. I know this is also the AI related stuff, but I can't also help but think that things with high valuations are generally taking a little bit of a hit here outside of semiconductors, which have, strong demand due to data centers. I think a lot of the stuff is taking a hit, and I can't help but think that a good chunk of it is that the globe is moving away from high risk stuff due to rising interest rates in Japan. Now, I know everyone will kind of shrug at that, roll their eyes and say, well, what does Japan have to do with the NASDAQ? What does Japan have to do with Bitcoin? And it's kind of everything, because the global money flow, a lot of it comes from borrowing money from Japan and buying US stocks, buying Bitcoin, etc. So interesting stuff. VIX is tumbling lower here. This is as one might expect. And again, I'll stick with my idea. I do think the dollar index is more likely to continue moving higher than it is to completely crater and move lower. Again, we'll see. I could be wrong, but that's my thesis going into today's trading. S&P, NASDAQ, definitely now resolving more to the upside. Here it is on the 4-hour chart. NASDAQ still has some room to kind of claw back from this recent funk we've been in, retracing at this point from those highs, or recent highs, I should say, almost back to that 61.8% retracement. If you do break through this level, could be interesting to see if we are going to make a run back to those all-time highs. But strong jobs data today, great start. We'll see what the CPI print here this week also brings to us. Could be really interesting. Nick, NASDAQ has been ripping since NFP data release, but Edgefinder still has it as a bearish score. Was this data release viewed as a bullish catalyst? Yeah, great question. So Edgefinder, let's go take a look at it. So NASDAQ recently has been a bullish score. So once this updates, and it will update soon, this is no longer going to be bearish. I'll tell you that right now, because non-farm payroll came in better than expected. That is going to flip to bullish. That's going to reflect in a +2 overall score here. For fundamentals, fundamentals will go to 0 after this. That will bring this score by +2. So we'll be at roughly a -3 today. So yeah, NASDAQ will be neutral by, in the next hour or less. So, NASDAQ for me has also been one that I've just not been really interested in touching. Even though I've seen that bearish signal from Edgefinder, I do still wait to see some kind of confidence from the technicals. So had we seen, break through these lows, and perhaps, for example, today, a weak jobs report, like a really weak one, that would have potentially been a short setup for me. But I didn't take any trades, and I still don't have any interest in taking a trades. NASDAQ's going to kind of come back to neutral. If CPI comes in really strong, though, I'll tell you this. If CPI comes in a really good way, meaning lower than expected for stocks, there's a good chance that this actually flips Edgefinder into more of a positive stance on indices, and I could actually be looking for breakouts to the highs. What's much closer to me for a possible setup is the S&P 500. S&P 500, if this or with this really nice jobs report, if we get a good CPI print, there's a good chance, in my view, that we see new highs on the S&P 500. We see some strength come into this one. So going to continue to watch that. We'll see how that all plays. No Chris today. Yeah, no, he's traveling, I think, right now. Nick, personally, I'm accumulating IBIT. I've sold puts on. I understand what you mean, but people were saying same thing as Bitcoin was 10K. So I recommend to look and act for the future. Yeah, I mean, if you like Bitcoin, do your thing. I just think that for me personally, when it comes to longer term stuff, the reason I'm just not a big Bitcoin person is because I much better understand, like, I know that, the doubters over and over on Bitcoin have been wrong throughout history, but that does not mean that the doubters will always be wrong on Bitcoin. And I'm not necessarily a doubter when it comes to Bitcoin. I'm like super neutral on it long term. I would love to see it go higher. I have a lot of stocks that would love to see that, but I just prefer to invest in stocks. It's something I understand better. I like businesses and things that produce yield and income. By that token, you might say, well, then why do you like gold? Because it produces nothing. Well, gold has a 5,000 year track record and has always been seen by humanity as some kind of safe form of place to store money that has survived countless fiat crashes and, by the way, economic recessions. The biggest sole thing that I see as the number one concern about Bitcoin is that it has never lived through an actual economic recession. It has lived in a time of prosperity. I know things have not all been great in the last 20 years, but on a relative basis, it's lived in a time of prosperity and quantitative easing out the wazoo. And what I mean by that, it's never been in a recession where, where things have fallen apart. If it was around in 2008, in a popular way, if everyone knew about Bitcoin in 2008, my concern, it would have been down 98%. And so I don't think that it's out of the question that you could see in a global meltdown, Bitcoin fall apart like we've never seen before. Because again, we've never seen Bitcoin in a down market, like a true down market, like a long, painful bear market. And yet we've seen very painful episodes in Bitcoin in great times. Like even 2022, really painful, but not 2008 level painful. My concern with Bitcoin is that when that day comes, it will either prove that it is some kind of hedge to the world, or it will fall 98%. And I don't know which way it goes. Like I'm not a crypto expert. Maybe the true believers during a global fallout economic recession that I'm not calling or predicting or know when it's going to happen. But if and when that day comes, my concern with Bitcoin is you could get down 98% easily. Again, stocks, Amazon, like amazing companies in 2000 and in 2008 crashed 90+%. So what's to say that something like Bitcoin, which I'm using my evidence-based logical thinking process here, I'm saying it's super correlated to high-risk stocks. What happens to high-risk stocks in meltdowns? They collapse. Many of them go to zero. Many of them go 90% down or more. Is it that illogical for me to say, well, if we see an economic recession, those things highly correlated to Bitcoin crash to almost zero? Is it fair to say that Bitcoin could do something similar? Again, I'm not a bear. Like I'm just telling you, risk reward is everything in markets. If the markets crash like that, guess what? I'm going to buy some Bitcoin. But until then, there's just, to me, it's a risky game, and I don't understand it enough to feel like I can passively invest and feel confident doing so. Because if that day starts tomorrow, I don't know that I'm wanting to watch 98% of my value of something I bought go down. Anyways, that's my thought. I know it's not always popular because the crypto crowd, I'm not trying to dog on you whatsoever. I'm just telling you, know your risks. Bitcoin, if it's leveraged, or it's a very, highly speculative, highly leveraged product, just be careful with it. And hey, I hope it does. I hope it goes up 10,000% in the next 2 years. And I hope you do really, really well with it. To anyone who owns a little bit, I'm just telling you, know the risks. Please be careful. Take care of yourself and your families. Risk, in my opinion, is more important to pay attention to than potential reward, always. With that said, up next, we have Marco from Marco's Trading Journey. I think he might be doing a giveaway today. We've got a crowd here today, so we're going to be doing some awesome giveaways, I believe. with the partner of today's live stream. Of course, that is DNA Funded. They're going to be doing some giveaways with you guys here in the audience. If you want to win a free access to DNA Funded, a funded account challenge, then stick around. I think we'll have some of that interesting stuff coming your way. Last thing on that, giveaway is coming today, affirmed by our friend Marco here in the chat. Stay tuned on that. Here it comes just after this quick break. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello guys, welcome to my segment. I hope you're doing well, hope you're having a good trading week. So before we get started with my segment, I will post a link to the DNA Funded account giveaway form. So in the chat, you can find the link, go to the form, fill it out, and you'll be entered into a giveaway. I'll put all of your names in a wheel. We'll spin the wheel, and the winner gets a free DNA Funded challenge. It is a 10K one-phase challenge. Let me just quickly check. So let me see my codes. Yeah, so 10K one-phase challenge. And then after my segment, I will send you the code through email, right? So fill it out. Now let's get into the markets. So what has been happening? Well, NFP, of course, we have a pretty crazy NFP print. Reaction on the 1 hour is very bullish on DXY. I'm sure Nick went through the print. Basically, the employment change, super bullish, 2x outperformance of the forecast, even more outperformance of the previous number. And then we have the unemployment rate falling from 4.4 to 4.3%. Let me check if the Edge Finder has already updated the numbers. So let's go to the inflation. Let's go to the unemployment, the labor, and then the unemployment. USD. Okay, so 4.4 went down a bit. Actually, so we're waiting for the next print. It's 4.3. And then the NFP will be pretty high. So it will be, what we say, around 130K. So we're back in the 100K and above levels, which is nice. That's pretty good for the US economy. Really good number, and pretty good number for the dollar as well. What I'm looking to do on the dollar, well, I'm looking to sell it, if I'm being honest. I'm looking to buy the Aussie dollar, which had a dip and then exploded higher, which is interesting. The only position I currently have is on the Nikkei. So the Nikkei position is the only one I have right here. And this was a signal in the A1 Discord. So if you want to join the A1 Discord, you can click the link in the description, and you can use the code Marco to get 25% off. If you want to get Nick's signals, Iwind, Chris Palver, Alan, and me, it's all in the Discord. It's all in the link. I highly recommend you check it out and use the discount code. Trail the stop loss a little bit on this one. New stop is at 53960. I'm looking to stay in for as long as I can. I still like the bullish Japan story. I'm actually starting to become a bit bullish on the yen. Looking at some possible bullish yen plays. Let me just see what the Edge Finder is saying. Let's see, for example, Euro JPY. What do we have for the Euro JPY? Neutral. USD JPY. Neutral as well. Okay, so unfortunately neutral readings, but I'm going to look into it. I do want to play a possible yen long. Before I do a yen long, I'm just going to keep buying the Nikkei stock market. If we go back to the 20 MA, I'm going to buy it again. There has been definite outperformance by the, let me just see, so 2025, by the Nikkei of the S&P. So if you go to the plus button and you go to the S&P from Jan 2025 up until now is up, is this correct? Let's see, around 18.86%. Nikkei is up 48%. So massive outperformance. I do believe this is going to continue. We're not getting such a sell America narrative as much as we are getting sort of new money goes into Nikkei DAX, Brazil, Peru, emerging markets, gold and silver. That's kind of what I'm seeing. It's not the full-on sell the S&P because the S&P is still doing pretty well, extremely close to the all-time highs, right? I know Nick was talking about rising cost of borrowing because if you go to the central bank rate forecasts and you go to the Bank of Japan, you're going to see that by the end of 2026, they're planning to hike rates. Okay, they're planning to have an implied rate of 1.35%. Right now, the current rate is at 0.75. So they're planning to raise the interest rate, which makes borrowing expensive. It makes the carry trade less profitable. So we can also go to the Edge Finder. We can go to the carry trade scanner. And you can go to USD JPY. So currently, carry direction is a buy. The divergence is 3%. We can also go to see that in carry trade scanners. Eco strength index. We can see the real yield. Okay, you can see the real yield for the US pretty positive. For Japan, it's still pretty negative. But as the Bank of Japan keeps raising the rate, this negative number will keep on becoming closer to zero. So it makes the carry trade worse. It makes borrowing more expensive, and it may make people, let's say, put less money into the S&P, NASDAQ, basically AI race, artificial intelligence. So that could be happening. It's not like 100% confirmed, but how you can play this market, what you can do is you can get in on the Nikkei, or you can try getting in on the DAX, although DAX, not such a great player at the moment. Nikkei definitely outperforming most of the other indices. Or you can go to emerging markets if that is something that you have access to. Again, most brokers, most prop firms even, they won't really give you access to, buying stocks in Peru or buying stocks in Brazil or like those emerging markets. So you're kind of limited, but then again, you can look at Japan. Going through the watch list that I have, the Nikkei, just looking to trail my stop loss if we continue going higher. Aussie dollar, I wanted to buy it, missed my entry at 0.69. So I was asleep when this happened. Alarm went on, alarm went off. I didn't wake up, but that's okay. I'm looking for a pullback. I'm looking for sort of another entry. If the 20 MA keeps on climbing higher and the price pulls back a bit, I think it's game on to get in. If we zoom out, there is a pretty significant level of resistance at this point right here. So this is resistance. That is problematic. So we could see a pullback at this point, which would be good for me because I would get in. But I definitely don't want to buy at this level because on this shorter cycle, this is the all-time high. When you're looking at the last few weeks, the last few months, this is the all-time high. And then we're stuck or we're close to a resistance level that is really, really strong. So could this be the time for a pullback? Hopefully. Hopefully. If it happens, I'll get in. If it doesn't happen, I'll do nothing. That's the game plan on the Aussie dollar. Does it still have a bullish reading? That is something that we need to check because the NFP has printed. We still have a bullish reading. Okay, we're going to see when the NFP updates what's going to happen. Gold. I want to buy gold, but I'm looking for a bullish print. Okay. By the way, a reminder, if you want to participate in the giveaway, in a few minutes, I'll pick the winner. I'll put the form in the comment section one more time. So fill out the form and you'll enter into a giveaway for a DNA 10K one-phase account. Anyway, gold, looking to buy it, but I need actually getting a bullish reading right now. Okay, awesome, awesome. So what has changed? Let's see. What has changed on gold? Retail sentiment has went up. Nice, nice, interesting. I'm gonna see what happens once the NFP updates and once the unemployment rate updates, and then I can consider getting in on a long setup. This is looking pretty healthy. I know we're not that close to the 20 MA, but still, I think taking an initial entry at this level with smaller risk, you can say, stop loss below the 20 MA, not a bad play, not a bad play. So let's look into that. Absolutely, gold looks interesting at the moment. Pound Aussie just flying away without me. Unfortunately, never got the pullback to the 20 MA. This is now overextended. I'll still keep on looking at it, but I don't think I'll get an entry. Unfortunately, I was a bit too slow. To react on the Pound Aussie. Okay, NSIKAK. I sent you an email. So I did send you an email with the code. I will double check this, but I did send you an email yesterday, so you should have gotten it. Maybe check your spam. Try checking your spam folder. Should be in there. Anyway, time for the giveaway. Let me just grab all of the names. So let me grab all of the names. And NSIKK, if you didn't receive my email, you can contact me on the A1 Trading Discord, or you can send an email to A1 Trading Support. Okay, we'll solve it in the background. So check your spam. If it's not in the spam, contact me on Discord, in the A1 Discord, or just send an email to A1 Trading Support, and we'll get you set up with the code. The names. Today is the 11th. Okay. Quite a few entries today, which is great to see. By the way, I do these giveaways every single day during my segment. I have a lot more codes to give away. Okay, we just got another submission. Whoop. Sorry guys, I'm handling this in the background. Trying to copy and paste all of the names. Okay, that's it. Pasted. Now we go to the wheel. Spin. Let's see. So the winner is Ravi R. Ravi R is the winner. Thank you everyone for playing. Ravi, after my segment, I will send you an email with the code for a free. It's gonna be a free 10K one-phase DNA funded account. Okay. If you want to get funded and you didn't win the giveaway, you can do so with our code, which is A1 Live. So A1 Live gets you 25% off any DNA funded challenge. A1 Live. This is my account right here. What do we have? Do we have any trades open? One trade open at the moment. This is a 25K two-phase challenge. I'm currently up around 5.7% with one trade open on the SPX. So yeah, you can see the profit target here, kind of in the middle of the profit target. Trading days are done. Daily loss is okay. Total loss is okay. We're going to see what happens. So again, So far, I've had a great experience trading it. They're using Trade Locker software, which in my opinion is the best software trading execution software in the game. DNA Fund is being ran by a big broker behind the scenes, so it's not just some trader in the basement. And the best part about it, you can get a great price with the discount code A1Live. Okay? Let's see. Gold, Eurodollar, NZD/JPY, MSTR shorts. MSTR, is that MicroStrategy? MSTR. MicroStrategy bouncing off a little bit on the daily, although this is just a super bearish story. So the price of MicroStrategy is highly correlated with the price of Bitcoin. And if gold or if Bitcoin price goes down, this thing is gonna go flying lower as well. Edgefinder NFP data not updated. It's gonna update in a few minutes, I'm sure. So it's all done automatically in the background, and it just takes a few minutes to update. Okay, NASDAQ, Swiss yen. Anyways, for all of you that didn't win the giveaway, you can join me tomorrow. Here's my schedule. I have more codes to give away. So tomorrow, I'm on at 10:15 Eastern Standard. Friday, I'm on at 9 a.m. Eastern Standard Time. Let's take a look at the US stock markets. So S&P, pretty close to all-time highs. NASDAQ seems flat overall, not doing much. Dow Jones, all-time highs. Russell looks pretty good. It looks okay. What about Google? Google broke the 20 MA, is below the 20 MA, doesn't look super bullish at the moment. Although out of all of the stock names with artificial intelligence, Google is my favorite. Google is definitely my favorite one when it comes to the artificial intelligence stock market. Because it's kind of the only company, just a side note. So Google is investing massively into artificial intelligence, but it still has a huge income source from its other services. While companies such as OpenAI and X and Grok, they do have income coming from X, but Anthropic, I'm not sure if they make any sort of income at the moment. I'm not sure how it works, but Google, again, massive company, biggest company in the world, and it's getting massive revenue from other sources. So it can actually put that money into artificial intelligence while still doing good business and while still keeping their stock price healthy. That's why I like Google so much, but I don't want to buy it. I don't want to buy it because there has recently been a shift from buybacks to massive capex spending, which could be a bit problematic. And the NASDAQ, as sort of the basket, is not moving. If NASDAQ goes into all-time highs, I'll be pretty happy to get into Google. As far as, let's say, the S&P goes, so am I looking for buy setups on the SPX or the Dow or the Russell, you may ask? Well, no, I'm not looking at those things because I much prefer the Nikkei. I think outperformance by the Nikkei, maybe even the DAX, is going to continue into 2026. So that's kind of my take on the US stock market. NASDAQ, I would like to get in if the artificial intelligence story heats up again and if this goes into all-time highs. Then I think there could be a big opportunity to go up. So if we do this and then continue higher, I would, of course, try to get in somewhere on the breakout. I think we could see a lot of upside. Right now, the story seems to be dying down just a little bit. So gold, the big news today is that Edgefinder is bullish, which is great. So gold getting a bullish reading. Let me just update this, see if something changed with the NFP. Okay, let's see. Okay. So More charts. NZD-JPY. NZD-JPY. Let's take a look. NZD-JPY. I think that was a pretty popular request. Trend line, 20 MA, respecting it nicely. I think it looks fine. I also believe the edge finder is bullish. So getting a bullish reading right here. Score 7. That's nice. I like it. I like it. I'm not looking to get in because I'm starting to become a bit bullish on the yen. If I'm looking at the whole story in Japan with the new prime minister and with the recent lower house election. So I'm starting to become a little bit bullish on Japan or on the yen even. So I don't want to jump in. But if you are looking at simply, if it's in your plan to look simply at technical analysis, the daily chart, the 20 MA, and the edge finder, I think this is a nice play. I think there is an edge in this position. So I do like it. USD-JPY. That's an interesting one. USD-JPY. USD-JPY, I was looking to play a possible intervention. For that, I would have liked to see 159 or 160. We're now too low. So the price just crushed lower, which is problematic. So there's not going to be an intervention at these levels. And I'm not looking to play anything at these levels, if I'm being honest. I'm not looking to sell. I'm not looking to buy. I'm just looking for the price to move away from these levels. The best case scenario for me personally would be if we go back to 159, 160, and then I'll take a sell limit or just a market sell, and I'll bet on a possible intervention. But the yen seems to be catching a bid. The yen definitely seems to be catching a bid, and the yen seems to be liking this new recent election news. So you can see it on the Monday open, gapped up, and now we are continuing higher on the JXY. Do I really want to go short into that, or do I really want to go long into that? No. And short, no, not on UJ, not on USD-JPY. Maybe Euro-Yen? Euro-JPY. Yeah, we'll see. We'll see. Let's see the 1 hour. Right. NSI KAK, I received your email yesterday, but it did not contain a code. Could you please resend it? Sure, I can resend it. Can you just respond to the email so that I know it's actually you? So just respond to my email, write down hello or something, just so I have the confirmation that it's your email. Because I'm pretty sure I attached the code into it. GJ. Maybe GJ could be good. GBP JPY, because I am bearish on the pound. Yeah, what about the edge finder? GBP JPY. Neutral reading on the edge finder on GJ. But if I had to pick, this would be a pretty nice contender to go short. So if I'm betting on yen strength, the pound is one of the weaker currencies at the moment. The UK is not doing well. The situation in the UK is kind of problematic. They are not producing the best numbers, so selling this one could be nice. I was trying to sell the pound Aussie, but I just could not. I could not get a pullback. So GJ may be the next best thing when it comes to selling the pound and buying the yen, basically. Nice example. Okay, let me see what I like from the comments. CHF JPY, I think that's not such a great play. Yeah, I don't like this. What about dollar Swiss? Dollar Swiss, I'm looking to see if this thing drops more. Then I'll execute a buy setup at the lows. Okay, so that's the game plan for USD Swiss, executing a buy setup right there. I think this level could get heavily defended. That's why I do like it. And the last thing for today, what can we look at? Bitcoin. Last thing for today. Just going down. Maybe pausing a bit, but overall, I'm still pretty bearish on Bitcoin. So that's about it. We have Forex James coming on after me. Thank you very much for watching. If you want to get access or if you want to participate in more DNA funded giveaways, just join my live streams. I give away one code per stream. Good luck in the markets. If you want to get updates about my positions, join the A1 Trading Discord. See you tomorrow.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. How's everyone doing? Happy Wednesday. Halfway through the week, hump day. Hope you're all well. Okay, so there's not much going on for me in terms of watch list. It's more cases now of just managing positions, watching the markets, watching developments. So we did see the US data coming significantly better today, actually. I'm sure Nick's already gone over that with you, so I won't do a full coverage, but we can just take a very quick look. I'm not sure if it's updated yet, but we can see. Fifth, ADP, where's NFP gone? NFP hasn't been updated yet. However, this is extremely likely to flip the dollar even more bullish. We're already getting a 55% bullish reading, which is pretty much just in the middle ground. I mean, you can see the thresholds here on the dollar meter. So it wouldn't surprise me if we do see that flip later today on the back of today's news. And if we check the where is it? Oh, here, eco strength. The US dollar is still getting a bullish reading, and it's still the only one out of the G7 currencies getting a bullish reading on top of the data that we've had today that still hasn't actually been processed by the Edge Finder. So it's looking good. The dollar's looking good. It's funny, I made a reel earlier this week covering the dollar, just saying, is the dollar about to rally? It was more just a throwaway content piece. But someone in the comments was really angry about that, really not happy. However, maybe I can go back to that comment and say, haha, you were wrong. No, I'm only joking. But yeah, I mean, the trend line obviously still intact on the dollar. On a price action view, it's not looking great, to be perfectly honest. I'm no position right now to say that the dollar is actually going to begin a crazy rally. But if we just take into context, is the Fed in a position to cut rates? No, I don't think so. We've had better labor market data. Inflation isn't low enough to warrant cutting rates, in my opinion. So I think it's more going to be a completely neutral, maybe even neutral to hawkish tone coming out of the Fed. Obviously, very data dependent going forwards, but just on what we've got at the moment, that's what I could imagine. And we do still have this nice left side on the dollar that could see some corrections over the time. And obviously, this is a weekly time frame. When I'm talking about all of this stuff, I'm not meaning next week or this month. It's a long-term sort of idea. Okay, so I just want to clarify that. Sluggy, hello. How you doing? Good to see you. James, short Euro Swiss. Has Aussie US dollar been updated? I would assume not. It doesn't seem like the Edge Finder has grabbed the NFP data just yet. EU or AUD doesn't want to give me an entry. Yeah, I actually closed my closed my pound Australian trade earlier this week, which was quite nice. We got a 5.25% gain on that one, which is really solid. Honestly, it's the start of this year has been phenomenal. However, now looking at it, maybe it was the wrong decision, but the reason I closed it was just because the technicals are looking a little bit stretched here. So we've broken out of this weekly 200 moving average. The RSI on the weekly, keep in mind, is overbought. And at the time, we were sort of hovering around this support level as well. So I was just sort of thinking we might see a bit of a mean reversion in the short term. that would allow me then to get back into another position, realize the profits here, and just wait for another opportunity. So that's still what I'm doing. I've not lost hope on the idea. You know, I'm still fully involved with the idea that this market can go lower, along with Euro Aussie as well. But yeah, it's just a case of realizing some of that profit and then looking to get back in on a later date. So for Euro Aussie, I do like this one pretty much just as much, maybe not as much. Obviously, we do have a bit of a dovish tone coming out of the Bank of England. But yeah, I think with Euro Aussie, and this is purely based on technical analysis, I don't have really any grounds to say this, but I would imagine this market would come down to around 1.6449, come back up into the fib, retest this level, and then continue lower from there. The reason I'm saying it would come down to this level is just because that's where the fib lines up with this previous level of structure. That's all it is. So don't take that too seriously, but that's what I'm looking for, is just a pullback, retest obviously on the break here, and then that would provide an opportunity. As for the yen pairs, there's a lot of talk about these at the moment. Obviously, dollar yen's taken a real hit today. Well, not today, actually, but over the past couple of days. I did actually go short dollar yen, but I closed it pretty much break even. I went short right here, and I closed it about here, just because I just didn't feel comfortable selling the yen. Selling dollar yen. Yeah, just wasn't overly happy with it. But clearly, that was the wrong decision to close that trade. Should have held it, but it is what it is. Now, if we look at the New Zealand yen, which is still getting a bullish reading on the edge finder, as far as I remember. Let me just double check. Yes, New Zealand. Oh wait, hold on. Looks like it's actually dropped off. New Zealand US dollar is getting a bullish reading now, which is good. But yeah, New Zealand yen is still getting that bullish reading. So if we're just going off the edge finder, this looks like it might be in a buy opportunity. Now, I'm not doing this. I'm not really happy beyond the edge finder with the central bank position. It seems like the Bank of Japan's ready to hike rates to around 1% potentially. I don't want to be involved in that. However, again, just from the edge finder, just from technicals, I quite like this level. We attempted to come down to 200, failed. We've come into the fib level. We've seen a nice rejection and closed back within. So yeah, based on, again, just technicals, it looks like this could continue to run higher. But yeah, personally, I'll be avoiding it for the time being. So yes, New Zealand US dollar is getting a bullish reading. So let's take a look at that. I'm in a few positions as well, so I'll go over those shortly. We'll do New Zealand US dollar, and I'll show you what positions I'm in. So yeah, I mean, tricky actually. There's not really anything I'm seeing here on a technical side, to be honest with you. To be honest, this is just a range. There is not really any clean price action to move from. I mean, objectively, we are in a bullish trend if we reference the moving averages, but you know, there's not really anything going on here. So I would need to see, I don't know, let's see, what would I need to see for this? Maybe something like this, pull back to a 50% retracement. That would also then come and retest some of these lows. But yeah, I mean, beyond that, there's really nothing there on a technical side for me, but it's one to keep on the watch list, so I'll keep it on there. So as for positions, I'm still in silver, which is moving quite well. Obviously, we've just had an NFP come out quite strong, so it is taking a little bit of a dip, but nothing major. Obviously, I'm trading this for a longer period of time, not just an intraday position. Euro dollar, obviously, is also taking a little bit of a hit, but overall, it's still in profit, and the trade's break even, so there's no risk on this trade at all anyway. New Zealand Swiss is very frustrating. So although it's in profit, it's been drawdown profit. It's just sort of sideways overall. So there's not really anything to say on this one, but we are still respecting this 200 moving average. Technically, from an objective standpoint, this is still a bullish trend, but again, it's not super clean. And Euro New Zealand, this was one I placed yesterday or a day before. I'm not sure. Let me see. What day was this? The 9th. Yeah, 2 days ago. So this was very aggressive. This isn't a trade I would normally take, but given the aggressive trends that we've seen across the board, I mean, look at Euro New Zealand, Pound Australian, Euro Australia, we're just seeing very strong trending markets. However, with this one, what we saw was a break below our 200 daily moving average, pull back up to retest, and a really nice daily rejection here. So what I thought was, you know what, we're getting this bearish reading on the edge finder. We've retested and rejected our 200 daily moving average. I don't really see anything on the H4. So I'm going to, excuse me, I'm going to scale down. So I went to the H1, which again is slightly out of character for the way I trade, but I was willing to take a little bit of extra risk, especially considering I just closed quite a large trade on the pound Aussie. I didn't mind reallocating to something. So fib from high to low. We pulled back into the fib, and then we had this really nice H4 bearish candle right there. This also was obviously a retest of this previous structure. So I entered, and so far, so smooth. Can't really complain. Yeah, about 1.2% profit at the moment. So again, nothing overly crazy, but smooth ride. And euro pound, not great right now. So this one was based basically just on the dovish Bank of England that we had the other day. We've also had a breakout of this trend line. This wasn't my trade, actually, to be transparent. This was one from one of my team at Elite Traders. He trades slightly differently, but it's similar in certain aspects. But yeah, we had the breakout of this trend line, retesting of these moving averages, and again with the slight central bank divergence that we've got in terms of hawkish and dovish and neutral. It was worth an attempt. So we'll see how this one goes. And Bitcoin, this was a personal trade. So this one, again, very aggressive, not really within my typical trading style, but I wanted to see if I could get something going on Bitcoin. Because initially I was looking for a 50% retrace. I know I've been talking for a while. I'll check the chat shortly. I do apologize. I just want to run through these, then we'll have a conversation. Yeah, initially I was looking for something like this, which would be a pullback on the daily within the fib, which we didn't get. We saw a little bit of buying pressure here, which very quickly faded, and it looks like we're going to continue lower. So I'm looking for around 50,000 on this trade, but it's very low risk. It's not it's not a trade where I'm that interested either way, to be honest with you. It's more just a little bit of a, if I'm right, cool, I'll get some pocket money. If I'm wrong, fine, whatever, no problem. But yeah, that's it. Sorry, guys, just bear with me. Let me just catch up on the chat here. What's your thoughts on Dow? Interesting. We'll have a look at the indices in a second. Let me just put it on the screen so I don't forget. That's massive, James. Congrats on that trade. Thank you, Sluggy. I appreciate it. Did you close EU? Nope, still in EU. It's just break even. Sorry, the stops at break even, so I'm just going to let it run from here. Check gold. Yes, we'll take a look at gold as well. You called it on the gap fill of pound Aussie. Yeah, I've got to say, actually, I think pound Aussie's been probably the best trade I've had in a very long time. In terms, not necessarily just in terms of the percentage, but in terms of the way, yeah, the way I managed to spot it quite quickly, capitalize on it. So yeah, I'm quite proud of that one. Bashi's here. Hello, Bashi. Yeah, there's talk on the street of possible hike towards 1%, but I don't think they would go above that. James, how can today's numbers affect the US stocks? Yes, we'll have a look at the indices in a moment. There's a speech under AUD News that seemed to spur AUD. Yes. RBA Deputy Governor, it seems to be important. I've honestly not checked that. Actually, I'll have to take a look after the stream. Okay, so let's move on to the US markets. Do we still have? So the S&P, yeah, the S&P is not reading bearish anymore. The NASDAQ is, however. Now, I actually am not really a fan of the US markets at the moment. So we are looking, and when I say we, I'm talking about my traders, Elite Traders, my staff. We're currently planning a short on the S&P, like quite a big short, looking for a 20 to 30, maybe a 40% drop. Now that obviously we're not executing that just yet, we're still doing our research and looking into it. But yeah, I've got to be honest, it's not looking too great, especially again with the positive US data we've had might delay that rate cut narrative that we've been seeing throughout the US. Obviously could feed into the short equities indices markets as well. And the fact that we're not really seeing anything here. So we've been range bound pretty much since, let's say around here, pretty much all year. So since the 19th of December, the S&P has done nothing. It's just been sideways, which doesn't, it's not, you know, it's not a massive indicator, but the fact that we've just been sat sideways for almost 3 months is strange. So maybe something's happening, maybe something's brewing, maybe people are waiting for something. I don't know. But yeah, I definitely wouldn't want to be a buyer. But also, I think it's a way too early to be a seller until there's a clear signal. So general rule when it comes to US market or US indices specifically is it's very difficult to be a short seller unless it's already happened. So what I mean by that is, if you have an idea on something like the NASDAQ or the S&P, let's say you want to be a short seller, unless the market agrees heavily, you're going to really struggle. Unless you're sort of scalping, intraday is different. I'm talking about swing trading and more long-term ideas. It's very, very difficult to do because the general drift of these markets is to the upside. So no matter what, you're going to be trading against the trend, generally speaking. So yeah, it's tricky anyway. And until the markets decide that it's time to turn bearish and time to have that, quote unquote crash, then, what can you do? Nothing really. It's more either you continue buying or you just wait. In my situation, it's just a case of waiting. So once the market does show that we're breaking these lows and we're heading lower and the data reflects that as well, then yes, I'll jump in. But yeah, for now, absolutely nothing. So someone said the Dow. So let's take a look at the Dow. Okay, so the Dow's actually had quite a nice run. So just from a technical aspect, let's see. Yeah, so maybe if we could just print a slightly higher high, something like this might be an option. So although, I just said I don't want to buy, I don't, but given the market structure, we've had this nice move to the upside, based on technicals. A retracement back here, obviously we've had the break, look at the retest, and the continuation to the upside seems very reasonable. Again, from a fundamental aspect, personally, yeah, I don't want to be involved with that, but that's all I see right now. And that brings me on to the Nikkei, because I completely forgot to mention this one, but I would still like to be involved. We were looking at the Nikkei a while ago, and I was in it actually, but I took it. I think it was 1%. It was a tiny trade. When I say tiny, I'm obviously talking relative to the price movement. It was a tiny trade, and I closed it way too early. But yeah, I mean, I would still like to see a retracement back here. Obviously, again, we've had the break, look for the retest, and then continuation to the upside. But yeah, that's pretty much it. Actually, I don't want to do that. So there we go. Check Euro Swiss. Okay, yeah, we'll have a look at that one. Yeah, it wouldn't be a Trump tweet, Royal. It would be more a case of looking at external factors. I need to be careful with how I word this, but almost like 2008. Not saying we're going to have a 2008 type crash. I just mean we're approaching it like 2008, looking for those early indicators within the economy to start suggesting that something is breaking. And we've already come to the conclusion that something is breaking. I'm not going to start saying what just yet, because obviously I don't want to influence anyone to do anything silly. But yeah, there's definitely signs that something isn't quite right, especially obviously with the US stock market. So yeah, we'll see about that one. Anyway, I'm just looking at this chart. This is so ugly. Look at these daily candles. Euro Swiss isn't something I really pay attention to as a chart, but this is absolutely disgusting. Look at the amount of wicks on here. Anyway, let's move on from that. Bearish trend. Is there anything on here? The Edge Finder doesn't seem to have anything for Euro Swiss, so it puts me overall in a neutral territory. But again, just looking at the trend, if you are a technical trader, I think you could potentially just go in for a very easy short. So if we see a full pullback of 50% here or into the 61.8, I think a short position there is actually very valid. Again, just from a technical point of view. Yeah, this could make quite a lot of sense, but just be careful, because when you're trading these types of markets, you need to pay attention to its typical behavior, or at least its recent behavior. So what we can see is although it's trending to the downside, this is a very ugly, choppy market. So what you don't want to do is start trading it like a more liquid market or a more smooth market, and then get stopped out on something like this, where we actually do move down, but we just get so much chop in the meantime that your position's taken out. So yeah, just be mindful. But overall, I would say that yeah, short positions make more sense than long positions there. Russell played out well. Yeah, I've not checked the Russell either, but I was in the Russell for a couple of days, and then we got taken out at break even on one of the, where was it? Yeah, right here. So we went long. It was somewhere around there. Something like this. We were long, and I trailed stops at break even. So we were trailed out on this move right here, which was quite frustrating, obviously given where the market is now. But yeah, I mean, yeah, it was just the risk management behind the trade. It is what it is. Happens sometimes. The divergence between performance of small caps and large caps recently is big. Yeah, it does seem to be. I mean, the Dow's doing well. The Russell seems to be doing well, but yeah, the Nasdaq and the S&P seem to be pretty sluggish, really. Not much going on there. So I've got about 9 minutes left. So if there's any chart requests, let me know. If not, I can keep yapping away for a while. Yeah, so gold's getting about a bullish reading. So let's take a look at gold. Is there anything that we can find here? Not really immediately. There's not really that much that I could see. I suppose we could be looking at some sort of fib pullback. That is an option, although it's not great. It's not, it's not high quality, I would say, but the idea is there. So higher lows, we're obviously stuck on this resistance level. So if we could see gold come down to around our 200 to 100 moving average in this area and show a rejection to the upside, that would be quite a nice confluence, because it would bring us to our moving averages, but it would also be a fib pullback. So that's the option there. Or we could wait for a break, the retest here, and then a continuation to the upside. That's kind of the only play I've got right now. Where gold is at the moment, it's a little bit too risky for me to do anything, because I don't want to buy into resistance, but I also don't want to sell gold because I'm still bullish on gold. So yeah, it's just a case of wait and see. Thoughts on oil? Yeah, not really. So as you can see, I actually took a loss on oil here, which was a bit frustrating. Let me get rid of that. So oil's not something that I really do anything with in terms of trading or keeping up with supply and demand aspects. But yeah, I'm not seeing anything on the edge finder. The technicals look all right to continue higher, but obviously we are approaching this level of resistance. So I think if you wanted to be a buyer, you've kind of missed the opportunity here. I would, how would I approach this? I think, again, just very simple fib pullback would be potentially the idea. But again, the technicals here are kind of messy, sideways price action. So yeah, I think overall buys make sense. But yeah, it's more a case of, for me, I would have to wait for something to establish, whether it is, as we said in gold, break, retest of the high and then continuation, or it's a pullback and some sort of rejection on a moving average or a fib pullback. Yeah, very similar idea to gold. Dow looks excellent on a pullback. Yeah, I mean, I'm not going to be doing anything in the US markets just yet. Yeah, I'm just a little bit cautious. I'm not saying, again, I just want to reiterate, I'm not saying we're going to have some sort of crazy crash or anything specific. It might not happen. You know, I could be saying all this. The S&P runs and continues up towards 10K. I don't know. But just from what we're looking at the moment, we're just taking a very, very cautious stance. So it's more a case of I'm waiting for a possible sell rather than looking to buy. So I'm kind of just on the sidelines right now. So China 50 is doing pretty much nothing. The Russell seems to be showing some rejection here. So yeah, when it comes to indices, I think the only thing I'm interested in is the Nikkei at the moment. But again, we do have that potential rate hike coming, so maybe not the best time to be a buyer. The DAX was getting a bearish reading, which seems to have fallen off, which is interesting. It's a little bit frustrating, actually, because when the DAX was down towards this level, or maybe this one, I'm not sure which one, the edge finder was giving a bearish reading. So I was actually waiting for a break and a retest for shorts, but obviously we've seen two rejections off here, which would have been great buying opportunities, which I've missed, sadly. Yeah, that's the way it goes. But yeah, there's not really anything else in terms of what I'm paying attention to. The Aussie Swiss, I do quite like it, but again, it's kind of difficult to get into this market for me, for the way I trade, because it is very sort of sideways within an uptrend. So it's tricky because it's not consistent sort of 50% pullbacks. But yeah, I'm keeping an eye on the Aussie Swiss as well. Triangle. I'm not sure what you mean by triangle. Yeah, the DAX was bearish, but it's all right. It's been a great start to the year, so I'm not going to start complaining. So New Zealand CAD. Let's have a look at New Zealand CAD. Where is it? Here. This one looks okay, but similar to New Zealand dollar, it's a little bit choppy in terms of it's not really done anything since the end of January. So I think the way to approach this would be, yeah, I suppose you could go in for quite an aggressive entry. So it'd be a very normal sort of break retest type play. But the reason I would say this is a bit more aggressive is because obviously we've got this high here. So what you need to be careful of is if you're trading this retest, you don't want to see it obviously break this resistance level, but then come and double top here. And then you enter on what you think is a retest, and actually it's just another lower dip. That's one caution. But obviously, if you want to avoid that, just use a slightly higher resistance level. So something more like this, I think you could do. So that's also another option, but it depends how you want to do it. You got break even on DAX, unfortunate. Gold direction, we've just spoken about gold. The conclusion I've got is I want to be a buyer, but it's just a case of waiting because we do have a bullish reading on the edge finder for gold, but I'm not buying into this sort of triple top right here. So I would need to see either a pull, oops, that's not what I want to do, either a pullback into the fib here and a rejection, or a break, a retest, enter on this retest, and then continuation to the upside. That's the only two situations that I could be a buyer of gold. Beyond that, there is nothing for me to do here. Again, I can't sell it because the trend is bullish, the edge finder is bullish, my personal bias is bullish, but I can't buy it again because I'm not buying into a triple top. AUD, NZD, pound yen, and pound Aussie. So pound Aussie, immediately I would continue to look for shorts. That's still what I'm doing. So it's just a case really of waiting for when the mean reversion comes. So as we spoke about earlier, we've broken the 200 weekly moving average. The weekly RSI is oversold, and we're very deviated from our daily moving averages as well. Even the H4 is slightly deviated as well. So I would like to see a bit more of a deep retracement, and that would be quite a nice opportunity to be a seller. Pound New Zealand. That's also on my watch list. Why? I'm not sure why that's there. Let's see. So it's getting a bearish reading on the edge finder, which is nice, but yeah, technically cannot do anything just yet. So the daily is also, again, it's looking pretty oversold or stretched. The H4 is also, again, looking quite oversold or stretched, just deviating quite heavily from our moving averages. Quite aggressive selling pressure right here. So I'd need to see a bit of a deeper pullback or a higher pullback to warrant some sell positions. But yeah, sells on pound Aussie, pound, what was it? Pound Aussie, pound New Zealand, and pound yen actually as well. I think Marco spoke about pound yen, and I do actually agree with what he said. Although not for a very long-term trade. I think that we could see short-term pressure, especially if we do get more hawkish tones out of the BOJ and we continue with these dovish tones out of Bank of England. But overall, I don't see the Bank of Japan hiking rates really any further than maybe 1.25 at most. But obviously that is still relatively low interest rates compared to things like the BOE, ECB, Fed, etc. AUD, NZD on monthly looks like, yeah, I mean, we've spoken about the Aussie New Zealand quite a lot over the recent period. I do like it to the upside. I still think we've got some steam. I mean, clearly we've still got steam. I am just very worried about this level, also this range here. So the Australian economy and New Zealand economy are very closely related and quite correlated. So when we get moves like this, it's normal for us to actually see it mean revert back inside the range. I mean, we've seen it every time since, when was it, 2014? Rally, return to range, rally, return to range. It's just, there's nothing going on. So I now think that although, yes, the market is bullish, you've kind of missed the move, because at any point we could start seeing a mean reversion back to sort of the mean of the range. So yeah, for me, there's not really anything here, unless you're taking like short-term positions, but yeah, not my style. So what could weaken the Australian dollar? Well, if inflation starts coming down, if we get a pivot from the RBA, there's quite a lot of things actually. The Australian dollar is doing very well. So as soon as we start seeing cracks in the data, then we could obviously start looking for some sort of mean reversion position. But mean reversions are very difficult to trade. So obviously, if you've never done it or you don't know what it is, maybe just stay away and let this market play out. Anyway, ladies and gentlemen, we have Alan Perez coming to take over the show. So don't go anywhere. Alan's a fantastic guy, great trader, good hands with him. So guys, see you later. Stay safe. Don't get margin called, and I'll speak to you all tomorrow.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How's everyone doing today? Pretty good morning today, as we saw the U.S. non-farm payrolls beat by a lot here, significant amount, almost double what was expected. Let's go over some charts, guys. I did go ahead and place some V trades here. As I said, I was going to wait for the NFP report to see which way things would flow. And now we're seeming to be, or I'm sorry, it looks like we're going to see some dollar strength here in the future. We may get some chop in the short term here, but I think longer term, this is good for the dollar index. We did see a little bit of a whipsaw here on the dollar index. And we'll go to the 1 hour time frame. We did get a very big spike up, spike down, and it seems like we might be able to recover this move. We'll go ahead and see. One thing though, the dollar yen is being very, very stubborn in this, and I was listening earlier this morning, and we may have some intervention, but we need to see. We'll go ahead and confirm with that first. But for now, do think that we are going to see some dollar bullishness here. Maybe not in the short term, but maybe in the medium to long term, it'll definitely go ahead and play out. The reason why I say such a thing, we do have, for those that are using the Edge Finder, I know we have the free week going on, so I definitely recommend exploring all of the tools, all of the tabs, because you might not know which one kind of best suits you, but we have under the technical scanners for those that are using the Edge Finder at the moment. If you go to scenario backtest and you click the US dollar symbol here, you can actually look at the different scenarios that we've backtested. Now, if we're going to isolate it to the jobs report only, you can see the bullish and bearish scenarios. And if the NFP report beats by 25% or more, then you can see the 1 day, 1 week, and things really start to look interesting once you get into the 1 month, 6 month, 12 month average return. So the 1 day average return, not too crazy, right? 0.2%, not the best. 0.4 for the week. But once you go into that 1 month, 6 month time horizon, things start to pick up here. So that's why I say we may get some chop in the short term here. But looking more, extending your time horizon, it actually could look pretty well. So that's kind of why I decided to go ahead and go short the euro dollar and long dollar CAD. So right here, I have this 1-to-1 trade on the euro dollar for a couple of reasons, right? This NFP report was in favor of the dollar, right? We also had unemployment rate tick down lower just a tad. But then you also do have that the ECB does not like a super strong euro, and they're looking to intervene if it gets too high there. So this is a 1-to-1 trade. So it's not the best risk reward, but these usually have a higher win rate. So I'm going to go ahead and I went ahead and shorted the euro dollar and a little bit of drawdown here, but I'm looking to target this level right here. Now I'm very open to go ahead and moving this take profit lower if it does start to go make some new structure, things like that. But for now, this is a 1-to-1 trade. Now, the other thing that I went ahead and did was go long dollar CAD. Dollar CAD, I think, technically speaking, is at a very, very good level. Now, I did mention this as well. There's a specific scenario that I'm looking to go long dollar CAD, right? Strong dollar, which is what we're getting at the moment, or what I'm projected to get at the moment. But also oil, right? Canadian dollar is very much somewhat correlated to oil. And right now, oil prices are pretty elevated. Now, that kind of contradicts what I'm saying, but we are at a level of what could be resistance here for oil. In the past, we've pretty much faded this move here. We do have some indicators saying that, supply might overshoot demand. And so that's why I think this is a very good chance to go ahead and short oil. Again, I could be completely wrong. This thing could blow past this thing. Perfectly fine with that, right? Also, too, you do have USD Iran talks. Now, we do have oil tanks area, and we do have threats going on, but for the most part, it seems like both sides are looking to go ahead and resolve the issue. If we do get those headlines, then I do think oil, this recent move, can go ahead and fade off of that. We see here on the 26th, which is not too long ago of January, we got up into here and then we faded lower. So I think we might get the same opportunity again. So that's why when dollar CAD, again, you have a stop loss right below this level of support. Again, not the best risk reward. It's a 1.59, but nonetheless a good trade in my opinion. And I did like how we were pretty much rejected this level of support multiple times. So we did the same thing on the 26th, traded above it, and this is now the week of February 9th here. So we might get that same scenario play out. So those are the two trades that I took. There's a lot of currency pairs that I could have took. Those are the two. I didn't take Aussie dollar short just because it's a risk on currency. We are seeing equities still doing somewhat okay here. So I didn't want to go short a risk currency when risk on is currently in play. So I was very specific in the two. So I think euro dollar was a good one as well, just because of the correlation with the dollar index. The euro dollar makes up most of that basket. So those were the two trades that I went ahead and took. So I'll be monitoring them. Look at dollar yen here. Super weak, relatively weak compared to the others. So I'm curious to see if we do get some headlines indicating that there was an actual intervention that took place following the news release. Let's see if you guys have any chart markups that you guys want me to go ahead and see. But yeah, I'm pretty happy with those two selections. Let's go ahead and see how gold is actually picking up here, up 1%, even though we do have some very slight, well, actually kind of flat now. Dollar index is pretty flat, but curious to see how the metals play out here. Silver still showing some relative weakness. I know we are still up 4.6%, but if you just look at the overall picture, things that we've been experiencing, this thing has been trending lower. GU short. Let's go ahead and look at GU short. I know I saw the chart here earlier. Yeah, I mean, we're in this range here. If you were able to short this thing, up into this level of resistance here that my cursor's picking at, fantastic trade. But right here, don't know, just because we're in the middle of this channel now, this thing can go either way. Like with all of my trades, right? This thing can go either way. So don't want to chase price here, but looks like a good opportunity. Now I know the pound, when it does get some strength, it moves pretty fast. Like you see this recent leg here. So if anything happens within the pound to support it, it will move pretty fast. So that's kind of why I hesitated on the pound. But I think euro dollar is a good proxy to go ahead and short the dollar, or short the euro, go long the dollar. Let's see from a 4-hour time frame here, see if I'm missing anything. Yeah, this would have been a really good opportunity here if you were to put a limit order here. But again, that we're acting in hindsight, so that's tricky to navigate for sure. See how oil's doing. So we are getting a little bit of reaction. Too soon to tell, though. We would need a very decisive close, rejecting this zone. But I do like that dollar CAD long position there. So, and we're still within the level of support as well, too. So we're not like too far out here. My stop's pretty wide, so 200 pip stop loss, or 195 pip stop loss on dollar CAD. And my upside is 310 pips. I'm just targeting this next level of what could be resistance in the past. So if you go here, we traded below here, we tapped into this, and then went to the downside here. So I'm basically just trying to play this little range here. Now, what happens if we get to this range and the fundamentals still support the dollar? Well, you just kind of, wait for a break and retest situation, and then you were to trail. Ultimately, though, like my hard take profit here would probably be this 1.4100. I think that's a decent area here. If you kind of just correlate it to the dollar index, that'll probably look like something like this 101 or 100 area. So I don't want to overshoot and overshoot my take profit, because with currencies, they are mean reverting. So you do have that risk. It's not like gold or equities where they tend to drift higher over time. So this is my current level here, and my hard stop or my hard take profit will be this 1.4100 level here. You see like this area here, this is pretty much like tariff threats. When US versus Canada, the 25% tariff initially, this was all of this price action is that right there. So super great moves. So I don't think we will get to levels that extreme. So that's why I have this level in mind here, this 1.4100. Let's see what else we have for the doc. I do think we have CPI coming Friday. Yeah, CPI is on Friday here. But yeah, pretty much overall good picture for the US. I know the rate cuts were expected for June, and now it's going to be for July. So if you go to CME Fed Watch, and this thing is really zoomed in here. And then you go to the probabilities. It was going to be initially in June, now no longer. Now it's in July. You can see that better here, illustrated here. So next one will be here in July, June, July-ish. So traders went ahead and fully priced in the rate cut to be in July instead of June, and that's why you're seeing a little bit of a bump in the dollar, but nothing too crazy. Equities here, I mean, still at the highs, nothing crazy. I wouldn't really trade equities here at these all-time highs. NASDAQ as well. NASDAQ showing some relative weakness. Actually, if you do see equities being supported, like strong growth and things like that, I know retail sales missed yesterday, but if you were to see like some continued relative strength in the US, I'd be interested in maybe this, if the NASDAQ reaches this level of support here in the past, maybe taking a long opportunity here. For S&P, not too much. US30 is still at the all-time highs pretty much. Russell too. Now, one thing I am curious for is if this is like, most of these major currency pairs are reaching these resistance levels. Like if you see the Aussie dollar here, pretty much at this level, when we got it here to the past, we get a strong projection to the downside. New Zealand dollar is also within the same boat here as well. And these are just my technical levels, so take this with a grain of salt. Technicals are subjective to the individual, but last time we got here, we did have a slight drift lower here. So it seems like most of the major currency pairs are lining up in that way as well. So something to keep in mind of. We did have a monster run up here for the Aussie dollar specifically, like just crazy run up. So maybe this is getting somewhat exhausted, and we can see the fundamentals slightly shift in favor for the dollar. Maybe this NFP report was just the beginning of that. I have some background noise. It could be my heater. Let me turn that off for you. Sorry about that. Should be coming off here very soon. It's cool that I have an app to control it. And Edgefinder is giving gold a +8 score. I mean, gold looks pretty well. Like it's been showing some relative strength, especially considering the silver, right? Comparing the two. Now, gold is kind of running away from us, right? So the thing with gold is initially I had this level of interest at the 4,400 level. Now, obviously, in the moment, right, you saw this, or we were all experiencing this monster drop. So like at the 44 level, it was kind of scary to be involved. But then you see this wake up, and then now as price action has developed, now it's a little bit more obvious. The caveat with that is price has pretty much run away from us here. So chasing the price is pretty much not something I would advise. Now, gold is getting a very good score, as you said. Let's go ahead and verify that. Top setups. Let's go ahead and do metals only. I mean, that's a great score. A +8 score is a strong score in my opinion. So what I would look for is maybe some microstructure or something like that if I were to trade it. The first level that catches my interest is that 4,700 level. So if we can somehow get into this level, maybe if we see some continued dollar strength, then this thing can go ahead and drop a little bit, 8%. And then you can get a better opportunity for gold. But depends on your rules, right? If you're like a day trader or something like that, and you're able to find an entry point aligned with that 8+ score, then be my guest. But in my opinion, the way I trade, I'm more of a swing trader, so I'll wait for a better pullback here to the downside. 4,700, ideally 4,400, but don't know if we'll get that far. That is about if I'm eyeballing it, yeah, about a 12-13% drop. But anything can happen. These metals have been swinging 4 or 5% a day. So, you know, if that trend continues, that's only 2 days away from getting there if something happens. But for now, I wouldn't really chase the price of gold, but it is a strong bullish reading, especially like if I'm wrong on the whole USB Iran and the oil thing. Let's say I'm wrong and things do escalate, then this thing can definitely go ahead and shoot and run up higher here, maybe to the all-time highs. I know a lot of banks have pushed back their targets to, instead of like 6,000, now they're shooting for 6,400, things like that. The only thing is no one knows really when that's going to happen. So the safer approach would be to go ahead and wait for some kind of a pullback, a meaningful one, and then go ahead and jump into gold. Othman, that was it? Okay, awesome. Yeah. Yep, crude oil inventory data in about 15 minutes. Yeah, we'll monitor that for sure. Let's see what it's looking like here. Besides that, though, we do have the Bank of Canada meeting minutes as well. So that could actually instill some volatility into my dollar CAD position. Could go for me or against me, but we will definitely go ahead and see. But you have stops in place, and I have a pretty hefty stop loss too. I have 200 pips almost of cushion to go ahead and let this thing breathe and play out. And you know, for the most part, those are the trades that really work out for me. Is the ones that I'm just like letting them breathe and letting them play out. Because it allows you to be more creative in your management style, right? Like if it, you know, pushes here and stuff like that, you have time to react, you have time to let it do what it has to do and things like that. And also too, the way I approach trading currencies is like, if I start to see this thing pop here and then make some microstructure like lower highs or higher highs, higher lows, then I can go ahead and slowly add to the position responsibly. Now, the only thing is you don't want to start adding position once you're like halfway here, because then your average price is like, you know, pretty close to where the current price is. And then any dip lower, you're in drawdown. So I only like to do that during the beginning phases of the trade, but that's why I like giving myself some breathing room. Let's look at yields though. Yields are higher on the day, but they're pushing lower, which is good for the rate cut story as well. You don't want to have sticky yields because then like interest rates for like homes and all that good stuff don't really follow suit. This is actually good for the economy, like lower yields. It's a good thing to see. Maybe we can unfreeze the housing market a little bit. Let's see, what else can we talk about here? Let's look at yields for other countries though, to see like, look at Euro 10-year yield here. So I like to follow the yield for the currencies. This is just like a side tip or whatever. It's not like a set in stone indicator or anything like that, but it's more of another layer that I like to look at. So I'm short euro dollar. I want to see the euro yields follow suit with that as well. If you like short the euro dollar, but then euro yields are like super sticky or super elevated, I don't like to see that. I like to see them kind of both follow in the same direction. So this is cool to see here for the euro dollar trade that I'm in. Japanese yields, I mean, they're still sticky up there at 2.23%. Are you really Trader Nick? I am not Trader Nick. Trader Nick was on in the beginning of the show. Trader Nick is the individual that you will see on the thumbnail of the live stream, but during the live stream here, we do have like different guests come on, and I'm at the end of the show here. But stay around. Like if you watch tomorrow's stream and all that good stuff, you will see Trader Nick and other people as well. That's a great question. I like to be early in the trade. In currencies, I like to be early because that's where you get the overall move. Like currencies, for the most part, I think I've talked about this before, but I'm so happy to go over it again. For example, dollar CAD, right? You have a lot of things that can go for and against you, like the pros and cons, like you mentioned, Cycling Club. I like to be early in currencies because for the most part, currencies kind of just chill, hang out here, right? They're pretty flat. But then when something is disrupted, like you get some kind of surprise data or anything like that, that's when you get to catch the fruits of the move. So I like to be very, very like, sometimes I like to be early on the move, and like I said, give me some breathing room, 195 pips, have it like a low position and willingness to add if it starts to catch the momentum. Now there are other times where you don't want to do that. For example, my Aussie dollar trade, this thing has run up, mean run up here, and I was just looking to get in. So at this point, I was no longer early in the move. I was just trying to get in the move. So at that point, I'm a little bit more conservative. I want to wait for pullbacks, and if I do get a pullback, it's a lower size. So it depends. So in the case of the Aussie dollar, when it was already running up here, more conservative, looking to like be safer. With the dollar CAD, I'm at this level of support here. If you just put the weekly time frame at this level of support, so definitely early in the move, right? You don't see oil weakness yet. We just got NFP report, so we're still subject to future data, right? Like we still have CPI. Depending on the outcome of that, that could definitely disrupt the trade. But I do like to be early at these like good levels here, because once you starts hitting the tape and things start to move, then that's like the best thing. And I'm open to the loss, right? Things can, like you said, there's pros and cons to it. That's why my initial position's somewhat smaller than usual, and I have a hefty stop loss. So it depends, but for the most part, with currencies, I like to be early. As long as the technical level looks okay, like very obvious. Like if you just look at dollar CAD here in the past, like look at this 1, 2, 3, 4, 5 times where we just bounce off of this level of resistance. Like the dollar CAD is one of those currency pairs that like tends to like trade in ranges. I mean, if you can see, this is very obvious right here. And this could be the next range here as well, like from here to here, this range right here. So that's kind of what I'm playing here. So I like to be early. How about DNA funded 50K? Awesome, man. That's awesome. Wish you the best. Treat it like a live account. That's all I would say. Treat it like a live account, like 0.5%, 1/4% risk on each trade. It may be cool to be, trading some higher capital than usual, but I promise over the long run, you will be very thankful that, you'll have access to higher capital if you trade it safe and pass the, I don't know if you got a 1 stage or 2 stage, but congrats. Any other currency pairs you guys would like for me to look at? I'll be more than happy to do so. We are seeing some slight, and I mean very, very slight dollar strength come into play. And you see equities taking a little bit of a dip on that here. So be interesting to see it, let it play out. Yeah, I'm really looking forward to see how this dollar CAD plays out with oil. Oil's getting slightly reaction here, so we'll see if that continues there. 8 trades today, break even. Awesome, man. If you're break even on the day, I consider that a win, honestly. Not every day is a trading day, and trading days are not always winning days. So break even is fantastic. Going to treat it like a real account? Yeah, man. Treat it like a real account. And then any profits, just, take them out and leave yourself some cushion and you'll be gravy. All right, you guys want me to look at the yen pairs here? Dollar yen, let's see how it's reacting still. Still relative weakness compared to the other dollar crosses. Pound yen, pretty interesting. Let's see how that's going. Pound yen is super volatile. This looks interesting. I don't know when I drew this trend line here, but pound yen looks good. This thing is the thing with the yen pairs is like they're very tricky at the moment, just because you have some super loose fiscal spending here that can cause inflationary pressures, which is counterintuitive to what they want to do. They want to hike the rates and all that good stuff, or the UPM wants to promote growth, but that can come with some short-term inflationary pressure. So that's the thing that you have to navigate with the yen. But from a technical basis, like the yen crosses could be good to short. You just need to see some very obvious technical breaches. So in this case here, you do have this upward trend line here. I know Swiss yen is the more like the one that most people are looking at. I did have this alert here, and we're still like at all-time highs. Like you need something very, very, very obvious for the Swiss yen. The reason why everyone likes the Swiss yen is because you get basically zero swaps. So it's not positive, but it's not negative either. So that's like the perfect vehicle to short the yen without having to pay hefty swaps. Because if you just look at the swap costs for shorting the yen, they can be very, very hefty. So we're going to go to carry trade scanner. And we just go anything with the yen. You can see here that all of these are in the buy direction, meaning you get a positive swap for buying anything versus the yen. So that means if you're selling the yen, you're going to have to pay a swap. And the Swiss yen is the only one out of this list of 7 currency crosses that does not happen. You actually get 0.75%. So it's not the best in the world, but it's the best vehicle to go ahead and short the short anything versus the yen. But it's just running up all-time high. So it's very, very hard to navigate. I would wait for the level that I'm waiting for is this upward trend line here. So if you get a clear breach below and a retest of some sort, then I think that'd be okay game to go ahead and short it. But for now, this is just super, super hard to do. But yeah. Look at pound yen. Yen is getting strength, but will you consider the decent 208 support holding? Let me go back to the pound yen to look at it better. I mean, it could. It very much could. It could hold. Like I think dollar yen should be going higher on this. Now it's not at the moment because you do have the speculation that there could have been an intervention after the news release. But for so far, yeah, I mean that's a good way to take a stab at it because the structure hasn't been broken yet. So I would say, technically speaking, yes, the 208 support level should hold, but you never know. If you do get like headlines that the Bank of Japan did go ahead and intervene, then you can expect some repricing and some volatility, and maybe that's the time when this thing starts to fall apart. Othman, we're going against each other. That's okay. You know what's the beauty about that, Othman? I always say this: you can have 2 different perspectives, and you guys can still profit. Like my time horizon on this trade is very, very much to the longer term, like maybe a week or 2, or even more, depending on how long this thing plays out. And my stop loss is 200 pips, versus you could have a shorter time horizon. And so while I'm in drawdown, you could be participating and taking your profit. So. But we'll see how it plays out. I'm pretty sure you're a swing trader too, Othman, from our quick discussions and things like that. So we'll see. We'll see how this plays out. We do have CPI on Friday, which can definitely disrupt my trade idea. Oil too. If oil just pops and there's escalations with the US and Iran, then that'll definitely hit my stop loss. So we'll see who wins, man. How many lots? It depends. If I'm early to a trade, well, for the most part, I always say, you can always add to a position, but it's much harder to take away from a position if it's going against you. So I always recommend like starting small and building the position, especially if your time horizon is a lot longer. But if it's a short position, like a 1 lot, 2 lot is okay. For me, at least. Yeah, dollar index is picking some steam here, so we'll see how that holds up. The next level of resistance for the dollar index is this 98 handle, as we rejected it before. So that's basically where I'm looking to go ahead and see if I'm willing to take profits on the euro dollar and dollar CAD. And then if we breach that level, of course, then the next one will be that 100 handle. And that 100 handle has been pretty good at stopping the dollar index since July 2025. And this looks to be like the range that we're hanging out in. So we'll see. I'll navigate this range, but I'm really happy to be entering the position towards the bottom end of this overall range. So if I delete this right here, this is basically the playground that we're navigating. And so considering the price action, we're towards the bottom end of that. So I'm happy to be in there. Now this thing can definitely fold if I'm completely wrong with the trade idea. And if I go to the weekly time frame, I can show you. If this level fails to hold and this longer term trends tends to like play out here, then the next level would be probably like this 92.90 area. If I go to the weekly time frame, this is the next very obvious level of support. But we'll see how it plays out. But that is the end of my segment here. One thing before I do go though, guys, definitely feel free to join the Telegram channel. It is completely free to do so. We'll go ahead and drop the link here in the chat. You do have daily chart markups that I put every day, as well as a little quiz at the end of the closing bell. But then we do have Edge Finder free week. So we do have a couple days until it ends, but definitely go ahead and take advantage of the free week. Join the Edge Finder, play around with it. I promise that it will go ahead and better your trading. Again, it is 100% free. So let me go ahead and drop the Telegram channel here in the chat. Join the free Telegram. There is a link there. We are more than happy to have you guys on the Telegram. And we'll see you guys tomorrow. Have a blessed rest of your day, guys. Bye-bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.